Really, it's remarkable. In the space of less than a week, this current conflict in the Middle East has reached a really precarious inflection point. It seems as though Israel has responded to last Sunday's Iranian attack with some kind of attack of its own on Iranian soil. So we're really moving into a new phase. These sides have been fighting kind of a shadow proxy war for a really long time. They're kind of drifting into now sort of state-on-state warfare. And the oil market is paying attention primarily because of the risk of a potential disruption of oil supplies from the Arabian Gulf via the Strait of Hormuz. And that flow is responsible for 21 million barrels per day if you think about crude oil and refined products. And the market is trying to figure out whether this conflict is going to intensify and risk those exports from the Arabian Gulf to world markets, or if there's a chance for the sides to back down and de-escalate.
I would like to get your thoughts on the level of oil price that we might see as a result of these tensions. We saw prices reaching that $90 barrel mark at one point off the back of these latest developments. Is this the level that we are going to be looking at in the near future?
Well, at Rapidan, we believe that we're likely to see oil prices move higher as the market continues to price the prospect of a disruption of supplies. And it doesn't have to be all 21 million barrels a day of oil or all 11 BCF a day of liquefied natural gas. Even a smaller disruption would greatly affect the supply-demand balance of the oil market. And so traders are trying to anticipate what amount of supply could be coming off the market and potentially for how long. So prices will probably continue to creep higher as this geopolitical risk factor is baked into expectations. If we do have a serious disruption from the Arabian Gulf, we could see triple-digit oil prices that are similar to the levels that we saw in 2022 after Russia invaded Ukraine, where you get to a level where really only a demand curtailment for transportation fuels and even economic recession come into play.
So, Clay, you say we could possibly be on the path to $100 a barrel oil, but I'm looking right now, I'm looking at Brent trading at about 87 and a quarter, got up to about 90 and 75 cents earlier. It seems like the oil market's already decided this won't be that big of a deal with so many questions left to be answered, including the U.S. Secretary of State speaking later this morning. Just give us a sense. How should we read the oil market? The fact that we saw it spike 3% and just normalize that quickly in just a matter of hours with, again, so many questions left to be answered.
You know, everyone, including traders, have had to put on their geopolitical risk analyst hat and try to ascertain these dynamic events in near real time. But I think that what you'll see is oil prices continue to tick higher on these headlines of the conflict potentially getting worse because there is a lot of oil supply at risk. At the same time, if it looks like this latest move was limited, and we believe that the governments on both sides still want to try to find a way to de-escalate, then it's possible that those upward price moves will be limited in their magnitude. We really need to wait and see next moves by both governments and find out if the situation is going to escalate, potentially compromising oil prices or oil supplies, or if things could move into really a more stable situation and allow diplomacy to take effect.